Hello, and welcome back to my YouTube channel. James here, as ever, for today's ACCA Taxation F6 exam video, where I'm going to walk and talk you through, as you can see above me, the External Examiner's Report for the tax exam from 2022. On my YouTube channel, I dedicate all my videos to my lovely subscribers, and today is no different. As you can see in the screen now, F2 Gamer kindly left me a lovely comment. Sadly, got in the 40s, but following the tips that we'll go through in this video, these are the things that the External Examiner writes for ACCA students, a really underused tool in my eyes. So get a pen and paper at the ready. We're going to go through section B now. And if you want access to all of my videos, be sure to subscribe and hit the button below, along with, of course, liking this video. And as ever, thank you so much for all the support for the channel. It's so lovely to hear that the videos are helping so many of you around the world. So be sure to leave me a comment at the bottom with any tax questions or ACCA queries or doubts that you have. More than happy to help. But without any sort of further ado, let's head on to the video, and you can access this document. Just click the link in the description of this video. It's going to take you directly onto ACCA's website, so you can take down the same notes that I have on the screen here. And again, we've also done a video on Section A on the channel and currently recording Section C, but feel free to check those out as well. These are the things that you need to be putting into practice to get you the 50 plus and to pass your examination. So if you haven't watched one of my videos on these sort of analysis before, everything that's underlined in red are the key critical areas that you need to get down, such as on here that Section B, as the External Examiner says, test knowledge of tax in a lot more depth, a lot more than Section A. So maybe when you're doing your exam preparation, this is where you need to factor in how much time you're going to dedicate to that particular area. This is where the External Examiner's Section B exam tip technique has come in. So if you want to take a screenshot or write it down, I'm just going to go through it now, but case questions will examine a single tax in the context of a given scenario and will cover a variety of different aspects of that particular tax. Therefore, candidates must be able to apply their knowledge of the tax to the specific scenario to be able to score well. That's where, in the examples we'll go through now on the screen, I'll just highlight the key areas, but you're going to see areas such as inheritance tax, income tax, corporation tax. These are things that you really need to be comfortable with going into your examination. But without any further ado, this is our first question you can see on here, and if you've downloaded the document, you can take down the same notes as I have. But we've got a classic inheritance tax question here, and just be aware that there's going to be different rates and different rules for different tax years. This video is going to take you through all of the different scenarios, so be sure to watch to the end, and you can apply the techniques to whichever tax year you are sitting your exam for. So as you can see on the screen, the key things I identified in this question are, first of all, well, if it was me in the exam, I go straight the way down to the requirements. And in this case, it was, what was the amount of the gross chargeable transfer in respect of Rishi's chargeable lifetime transfer made to the trust on the 16th of April 2015. And this is where we have a chargeable lifetime transfer, also known as the value of the gift after the exemptions plus the tax paid. So make sure you're getting these little notes down that will help you out when it comes to your examination. You can obviously see on the screen as well the actual answer, but it's completely up to you. If you want to have a go at this, feel free to pause the video now and then watch it through till the end. But coming back up to the actual requirements, what were the key things for you to pick up on in here? So we have a married couple in Nagina and Rishi. They've made 3 lifetime gifts, and this is where, if you're in the examination, you're getting a bit stuck. Usually the first part of the question refers to the first part of the scenario, and they work it down bit by bit. So if you're ever getting a bit lost, maybe you're stuck on Section A, or sorry, Requirement A of Section B, go straight to the top. It's most likely going to be there. Hence why we have the 16th of April 2015 there, and hence, as you can see on the screen, 16th of April 2015 there. But I'm only just going to go through the key elements for this video. You can read through it yourself on there. But we have a chargeable lifetime transfer into a trust, $355,000 after deducting all available exemptions. And notice how the after is in bold on there. We also have different points in time, so a good exam technique that you could use if you're going to do your exam in a centre base, you're actually allowed a scrap piece of paper, so drawing down a little timeline, you'll see it in some of the other questions we come on to later. It can help ACCA students to picture the different points in time and if it overlaps different tax years as well. Rishi also made gifts of 2,000 ordinary shares to Altium Limited. Rishi owned 8,000 of those shares, and issue share capital in total is £10,001 shares. So we're going to have different valuation and different holdings at different points in time on there, which we'll come on to later on. The nil rate band for the 15-16 tax year was 325,000. So again, when you're watching this video, just check the tax tables for your particular exam to see what the rate is for that. The final transaction, and again, you can see how it's nicely broken up. So you've got Rishi, first paragraph, first thing that's gone wrong, second paragraph, next scenario on there. And then Najir on here on the 11th of May 2018. Made a pet of 350,000 as a grandson for a wedding gift. So again, you've got to know your different allowances, which we'll come on to later on. And this figure is after deducting all available exemptions. Again, the nil rate band for the tax year 18-19 was exactly the same, 325,000 on there, and it was the only lifetime gift that Najina made. So let's head down to some of the answers on here about what the amount of the gross chargeable transfer was for the 16th of April 2015, and just go through it bit by bit and understand the process, what we're saying if you were actually in that scenario. So if you were a tax advisor, how would you go about it? Looking at the answer on here, so when calculating the lifetime, we need to look at the nil rate band first of all, 325,000. Rishi has agreed to pay the inheritance tax, so the rate is 25%, being 20% of the gift plus the tax on there. So in other words, the lifetime rate at 20%, not the death rate at 40%. That's another common area that people make mistakes on this exam. So therefore, we know that we have to gross it up by the 100 over 80. So taking that amount of the 20%, grossing it up to give us a rate of 25%. And this is where, have a look back at the question, go through it in your own time on there. But to take the figures, we then have the 355,000 for the actual gross chargeable transfer, less the nil rate band for that year. And that gives us at 25%, at 25% gives tax of 7,500. This is the gross chargeable transfer, being the value of the gift after exemptions plus the tax paid. So that is the key thing on there, the calculation breakdown of what was the actual amount for the 355,000 for the chargeable lifetime transfer plus the tax paid, and therefore that is what we have as what is the amount of the gross chargeable transfer. That's the key thing, gross chargeable transfer, and hence you can see on my notes where the mouse is, the chargeable lifetime transfer. Notice the change there in the wording. The chargeable lifetime transfer was the 355,000 plus the tax paid, which was £7,500 in this case on there. So let's head down to question number 2 now. And again, we've got links into, just like they said at the start of section B, it's going to test you, in this case inheritance tax, but going into a lot more detail and assessing different areas of that tax. And what it asked on here was, for inheritance tax purposes, what was the amount of the transfer of the value of Rishi's gift of 2,000 ordinary shares in Altium Limited? And again, we had those different values at different points in time when Rishi owns a certain amount of shares. But as you can see, the correct answer is £120,000 on there. So I'll put my mouse where you can see the actual figure came from. But then you need to work out the value of the estate before the gift and the value of the estate after the gift. And this is where you need to get down the diminution in value on there of 120,000. So you've got 2 steps really, as you can see in my notes. So before the gift, Rishi had 8,000 shares and a holding of 80%. The 80% came from the 8,000 shares divided by the 10,000 shares in total, giving us 80% on there. And when he has that value and holding, those shares are worth £30 each on there. So hence at that point in time, we had 8,000 shares at £30 each, giving us a total of £240,000. Then after it, Rishi only owned 6,000 shares, meaning it had fallen to 60% holding of the 10,000 and therefore only had a value of £20. So hence we have the diminishing in value on there of 120,000, giving us also some other examples of where students may have got it wrong on there. So some students calculated the 2,000 shares at a value of £10, which was incorrect, but you can see where they would have picked that up from. They've calculated it based on the 2,000 shares that were gifted rather than the value of the state changing. That is the key thing. So stick and follow to the value of the shares at the time of the transaction as a whole. That's the key thing on there. Coming down to question 3 now, and again, you've got the answers on here, but take a look at all the key elements that I've highlighted that you need to pick up on in your CBE exam. And we have what is the total value of the exemptions on here, which will have been deducted in calculating the value of the potentially exempt transfer that Najila made to her grandson on the 11th of May 2018. And this is where we need to consider the gifts of marriage on there, but I've got for my notes the knowing, understanding and implying of exemptions and allowances for a particular scenario. So in this case, the gift was made to her grandchild, the marriage exemption is available, which was £2,500, which again, for your particular examination in your tax year, that could change accordingly on there, but you just got to pick up on that it was relating to the marriage. The gift will also qualify for the annual exemptions, so that is the 2 amounts of £3,000 per year. It will most likely still be £3,000 per year for your examination, but again, just check to see if there have been any alterations. So we've got the £2,500 for the marriage exemption plus the 2 annual exemptions gives us a total of £8,500 on there. We also have the incorrect option, so allowing for 2 years of annual exemptions you can claim, which obviously is incorrect on there, where, we'll come on to the 7,000 first of all, is the answer of only 1,000 is given. So what they've done there is they've got 2 years of annual exemptions and only 1,000, which is a change in the annual exemption rate on there for marriage because it was increased to 2,500. So again, just to be clear on it, some students would have just put down 6,000, not taking into account the marriage allowance, and then finally only allowing for 1 year's worth of exemptions on there, qualifying exemptions, the annual ones, where you can take this year's annual exemption and also the prior year, assuming you have not claimed it. Now, question number 4 on here. What is the amount of inheritance tax that will be payable in respect to the potential exempt transfer made to the grandson on the 11th of May 2018 as a result of Najida's death? The correct answer was £8,000 if you've had a go at this question yourself, but I've put it down on my notes. This would have been a really helpful question to have a timeline to help yourself out with those key dates as to when she died, how many years are we going back, because this is relating to aspects such as tapering on here. So no previous chargeable transfers in the 7 years before the death, so the full nil rate band is available. Najila lived more than 3 years but less than 4 years from making the gift, therefore taper relief is available on there to reduce the tax on a basis of 20%. So we take the potential exempt transfer less the nil rate bands, and because this is at death, we apply the death tax rate of 40%, not the 20% that we saw above when the individual was still alive. The taper relief available, that's where we have the 10,000 that is chargeable multiplied by the 20%, giving it down to 8,000 on there. And again, it shows us some other incorrect options, such as missing the relief altogether for taper relief. So again, a nice little timeline would have helped with that. Applying the full charge approach and some relief incorrectly applied. So just be careful with your workings, but just go through it one by one, understand what period of time, how much taper relief can be applied on there, and how many years back from when the actual death happened and when the amount was transferred. Finally, you had a nice little drag and drop question on here about who is responsible for paying for inheritance tax. Again, a classically tested area in inheritance tax, also in section A as well. where we had a potential exempt transfer made to the grandson. Again, dates key factor in this, of the 11th of May 2018, and when this tax will be payable. So the key thing for this question is you've got the two individuals, who is responsible for the payment, and when is it paid by. So this is the responsibility and your dates on there. And there are some key aspects you need to be aware of. I'll just put them at the bottom here. So death tax on lifetime gifts, whoever is all about whoever received the gift, not the actual representatives. So therefore, because the grandson is in receipt of that gift, that is where the grandson is liable for it. And this is the key rule to remember. Again, this is for this particular tax year, but check it for your particular exam. It is due 6 months from the end of the month of death on there. The end of the month of death was the 30th of June 2021, so therefore 6 months after this end of month date will be the 31st of December 2021. And the key thing to come back onto that was, if I can find the date on the top up here, I might have come back up to the question on here. So we've got the 11th of May on there. Just trying to find the actual date on it for you on here. You're probably looking at it going, there's the date, James. Well, I'm coming back down to it now. I was just trying to explain it and refer back to it, but it's easier on there. So we've got the 11th of May, potential exempt transfer from the 11th of May. So the month of death, that was it. So she died in June 2021. That was where it was coming from on there. So it will just be the sentence of when she died in June 2021. We go to the end of the month, and therefore death tax is payable by the executors of the estate only if the estate is left by the deceased individual. So this is where the individual versus the executors of the estate versus an estate versus a gift. So she was alive when she made the gift. This is where the death tax is payable by the executors of the estate only on the estate left by the deceased individual. And that would take us down to section C. Oh, look at that. I've just realised she died on the 26th of June 2021. So again, just get that down for your notes and that'll help you on there. But that nicely takes us through an example of inheritance tax, how it was previously tested on a section B question. If you have enjoyed today's video, along with all the notes to help you out, be sure to give the video a massive like and thumbs up. As ever, thank you so much for all the support for the channel. Feel free to share the videos with any of your ACCA study buddies to help them pass their exam. And be sure to subscribe so you get access to all the free content. As we all know, it could be the little difference going through these notes, picking up on the extra marks, and getting you that 50+ to pass your tax exam. But, as always on that bombshell, I'll see you next time. Cheers!